With us today, we have Joseph Loughran, our Marketing Vice President, and then we have our special guest speaker, who's also known as the Levinson LTC Guru, Mr. Keith Birkin, who's going to speak in just a few more minutes here, and he's going to give everyone a long-term care 101 100-foot overview, if you will. I think it's so important these days. You know, we have a lot of life agents, a lot of health and P&C agents on the call, and obviously we're all trying to cross-sell and maximize every opportunity. So without bringing up long-term care in the conversation, you're really missing the boat, because a lot of these products are being sold, but just not by you, by maybe the local LTC specialist, if you will. So now is the time to get comfortable with the different product offerings around long-term care, because everyone is interested in at least hearing more about it. Okay, so we're here today to teach you the ins and outs of long-term care. And even if you never sold a LTC policy before, we hope by the end of today's presentation that you'll at least know the basics and be ready to at least call our office for a quote and obviously make that sale. So great commissions in LTC, great renewals. There's lots of money to be made here. The average premium on a long-term care case is double or triple what a typical term life policy pays out. So great opportunity all the way around, and most important, your client benefits, because we all know how long-term care can help with, let's say, a parent or to help a children or family member. So definitely a win-win, and we think it's important enough to have Keith speak to our agents on today's call to get everyone familiar with the concept. So what he's going to talk about, and I'll just tell you quickly without stealing his thunder, Keith has been in the industry now for over 15 years, and he has been a long-term care specialist. He was with Genworth previous, and now today One America, so he really understands the concept. He'll give some great sales ideas, and again, a 101 overview for those of you who are experienced in LTC or have never written a LTC app. Lots of stuff to come. Take out a pen and paper, jot down any notes, questions, comments, and then of course we can revisit those after the call. We do have the line closed just because of the number of attendees, but again, just jot down the question and we would be more than happy to revisit after the presentation. Okay, also, we at Levinson have put together some neat long-term care resources that you have access to 24/7 through our website. Okay, so we have some great stuff that we put together just for you, the agent, to make writing LTC easier and help to make you more successful in this part of the market space. Okay, so moving forward here, we're going to talk about our iGenius platform, and this is what we have put together over the years to help our agents be more successful, more organized, have the latest tools, technology, lead programs, basically everything you need to be a successful insurance agent in today's time and place. So great stuff here. We're only making this platform bigger and better for our agents, especially with the recent addition of the Agency Automator, okay, which is basically a CRM tool that will generate 1,000 new prospects every month for you to speak to through email, address, phone number, of course, name, business name. And we're going to show you how we have set up the lead generator system so you can dive in and sort through long-term care prospects. So all great stuff that fits exactly into what we're talking about today. Just real quick, as you can see, all of those bullets in front of you make up the iGenius platform. If there's anything that you want us to dive into after the call, again, just jot down that note, let us know, shoot us an email, call, whichever easier for you, and we would be more than happy to visit this. And I'll just point out a couple things. The orphan program, okay, that is in effect as of right now as we speak. So if you hit that minimum premium, we will literally email out free orphan leads as early as this afternoon. Okay, the mortgage lead protection program is the hottest thing we have right now. Every single week we place our orders on Monday. Okay, since January, our numbers have literally been up by 20, 30% with Monday, so 2 days ago, being our record week once again. So, you know, the proof is in the pudding there. If you're looking at purchasing leads from the internet or from some third-party lead company, look no further. Our program is superior. We don't make any money. In fact, it costs us money for you to participate. Okay, obviously the business has to go back through us, but what a great opportunity to save you a lot of money with leads. And number one is to make sure that these are 100% exclusive and the opportunity is there for you to share your story and make some sales. So great stuff with the lead program. Again, just let us know if you're interested and we will get you up and running. Okay, moving forward here, these are our various long-term care products and riders. Okay, so everything that you're looking at is available to you through Levinson. Now, I will say this. Keith obviously works with One America. They have a great story to tell with long-term care protection. In fact, I think that his offering is superior to what you're looking at, but it is also important to know that not every situation will call for, you know, let's say a certain product. So we have, in us as an IMO, we have to provide the most value for our agents. So yes, we lead with One America, but everything that you're looking at in front of you is also available to you with, just real quick, Hancock, AGLA, Protective, Transamerica, Lincoln has that MoneyGuard Link benefit product, Prudential, of course, Life of the Southwest, Kansas City Life Assurity, and North American. And I also want to mention we have some products that are basically a term policy with a long-term care rider built in. We have other linked benefit products that work kind of like an annuity that Keith is going to talk about a little more. But everything is available to you. And then what Joe did is he made it very, very simple. If you have a prospect that wants to discuss long-term care, we have a one-stop shop on our website for you to utilize. I'll let Joe touch on that briefly, and then we're going to move forward, and Keith will come on in just a few more minutes here. Joe?
Yeah, thanks, Bill. So I'm going to actually show a quick screenshot of our LTC resource page. This is actually, if you go right to the website and you go underneath the top menu there, you'll see long-term care. It's actually highlighted in blue. This will actually give you access to every single one of our LTC carriers. You can look at product information, brochures. You can even run quotes right from the website by clicking on the Quote It button and actually adjust the coverage in real time. So you can run full illustrations, full quotes right from the website. Also, you'll notice on the left-hand side, there's a specific area which focuses on long-term care prospecting. So not only do we have calculators, statistics on long-term care, we also have prospecting letters, which are huge for LTC business, being able to get in there and use those, especially when you pair it with our agency Automator platform. You'll notice on the bottom of the screen we have consumer emails and videos that are available specifically to generate leads for long-term care. So that leads me into my next slide, which is on our agency Automator platform. This is by far one of the the easiest programs to use to actually not only manage your own clients, but also generate new prospects. So with Agency Automator, as a Levinson agent, you have exclusive access to this two-part system. The first part is a CRM tool, which stands for Customer Relationship Management. So you can literally take all of your clients, group them by their date of birth, by their income, by their occupations, and you can send out any number of about 350 different email templates, including long-term care, and we just saw a sample of one that has a video included. But what's also unique about Automator is you can use the prospecting tool, and by working through our agency, you actually have access to that prospecting tool. You can generate leads. You get up to 1,000 prospects every single month. So I'll show you in the next slide here how to actually find local long-term care prospects using that Agency Automator tool. We also recently came out with the Agency Automator Plus platform, which is designed for general agents or FMOs that want to not only sell on an individual basis, but also recruit agents. And a great part of what we offer here as far as long-term care resources is not only do you have access to that, but if you have downline agents, you can actually use that Automator Plus program and access over 400,000 agents with a built-in email marketing program. So both programs are completely turnkey. Again, Agency Automator is designed for the agent to actually manage clients and prospects and go after new customers. Agency Automator Plus is designed for the agency to actually go out and find new agents to help spread the word and help you recruit as an agency. So what I did is a quick example here just to give you a great little idea as far as generating long-term care prospects is what you're looking at here is the Agency Automator platform, specifically the prospecting database. So what this allows you to do every single month is go into the system. Like I mentioned, you actually have 1,000 credits. You can actually pull 1,000 leads every single month. But what I did was I picked my zip code here at the office. I actually went in and looked for clients between the ages of 60 and 75. And inside of my own zip code, I actually filter by clients with a net worth of $250,000 or more. And this database is actually showing me, if you look at the bottom right-hand corner here, over 15,000 local prospects meet that criteria. Now this system, the Agency Automator Prospecting Tool, will not only give me their email address, it'll give me their full address, their phone number, all their income details, and I can then use the automated email marketing tool to actually reach out to that client, share the message about why long-term care coverage is so important, or if I want to, I can actually pick up the phone and call that client. So a very, very powerful resource, again, called Agency Automator. If you're not already using the program, you will receive a link this afternoon to actually go ahead and sign up for that platform. But one of the easiest ways to generate and find local prospects, especially when we're looking at a niche product like long-term care. So definitely something worth taking a look at.
Great stuff, Joe. Okay, so if you were at our Levinson Expo last Friday, you saw how many agents and agencies were in attendance. We actually had a record number. We hit over 200 agents in attendance. We couldn't be happier with the results from our annual Agent Expo. So personal thank you from everyone here to you. We seriously knocked it out of the park. And actually, Keith Birkin, who's on right now, he was the last speaker of the day. Okay, and he absolutely killed it as far as long-term care goes. So we invited him to be on today's webinar so we can not only speak to our local agents, but of course all of our agents across the country who couldn't make our expo on Friday. So without further ado, I'm going to introduce the Levinson LTC guru and One America VP, Keith Birkin, everybody.
Awesome. Thank you, Bill. Bill, you hear me loud and clear, right?
Yes, perfect.
Okay, fantastic. Bill, Joe, thank you for having me on the call. For those of you that were there Friday, what we're going to talk about today a little bit different than what I covered at the expo on Friday. And before I get into anything, I want to take a second and at the risk of being obsequious here, just really acknowledge Bill, Joe, Carrie, just basically Carrie Levinson and Associates in general for, number one, always being at the cutting edge of your technology platforms, your carrier platforms, the products that you guys are always so committed to. And honestly, when an agency takes such an interest in topics like this, LTC link benefits and so on, I can tell you, first of all, it's very opportunistic because it's a very exciting time right now in the industry with all of the unique solutions out there. But it's also because it's one of those products that really helps people at a time when they need it most. And it's an agency that cares, and I can tell you that from experience being in the industry for 17 years. So, and I've had the pleasure of working with them for going on about 10 years at this point. So today, I'm going to really talk more conceptually about LTC. Some of the products that you're going to see out there are phenomenal. You can do a lot of things with them. Products that have guaranteed premiums, lifetime benefits. There's chronic illness riders. There's life and indexed annuities, LTC linked with life, LTC linked with annuities. The money's most of the time liquid in these products. You still have traditional LTC. Historically there was traditional LTC and that was it. So there's so many different opportunities. to work with your clients. And if you're a financial planner, it's fantastic because you know where their money is. It makes it even easier. But before I even get into talking about some of the products that are out there, and I'll get a little specific, but more than anything, I'm going to talk about the link benefit opportunity and how the different mechanisms that you can use with it. I want to talk about LTC. I think it's really important that you really understand what this problem is and how expensive it is and what your clients are up against and some of the known factors that are impacting it and some of even those unknown factors that can impact it even greater. But honestly, more important than that, I think the most important thing of what I'll do with you guys today is help you and give you a conversation to talk about long-term care from a planning perspective. The bottom line is you want to hit your clients or prospective clients hot buttons on what is getting them to buy. And going out with just an illustration, as great as you think the financial solution and how well it fits their needs financially, it's not why they're buying this. And it comes from a lot of experience, not just from me, but from the people that we put these presentations together with, so it's important that you understand that. So the bottom line is, let's start off, long-term care is a problem. We know that it is an expensive problem. Right now, and this is actually not right now, this is Genworth's 2014 cost of care survey. So these numbers have gone up, but it's currently over $87,000 per year for a private room in a nursing home. And that again was 2014, so that number is probably gone up to over 90,000. But that's today. And if we assume just a modest inflation index on long-term care of 3.5%, and that's very modest. And by the way, the inflation index on long-term care has now exceeded education. So let's just assume a modest index of 3.5% cost of living adjustment. In 10 years, you're looking at almost $125,000 per year. A little eye-opening for people who maybe were considering self-insuring. 20 years down the road, almost $175,000 a year. But again, that's just assuming a 3.5% inflation index. And I want to pause for a second because there's 4 things that are going to happen in the next 10 years that will dramatically increase these numbers even more. And the first is the baby boomers, right? It's the biggest segment of our population, over 79 million people. The first wave of baby boomers turned 70 last year. So you've got the biggest segment of our population hitting their 80s in the next 10 years. And already there is an enormous dissonance between supply and demand. When you have the biggest segment of our population hitting their prime claim years, you're going to see an even bigger gap between the supply and demand, which of course will impact the cost of care. And then you have medical technology, which just, by the way, is a good problem to have, right? Things that were killing us 30 years ago are considered chronic conditions today. High blood pressure, high cholesterol, a variety of cardiovascular disorders used to be death sentences, but now easily medicated, very easily diagnosed. A lot of procedures and implantations that are absolutely extending life expectancy. We're living up to the age of 80. That's the average lifespan, and we all know we're even living longer than that. So because we're living longer, so dramatically increases the chance of us needing care, as will, of course, that will increase the cost associated with that. And then you have family dynamics. You might not know this, but 75% of all long-term care is provided at home. I think more staggering than that is that 70% of all care provided at home is provided by family members. But even that is changing because you got mom and dad in South Florida, and for those of us down here in South Florida know that's true because this is where everyone retires, right? Heaven's waiting room. But you got the kids in Chicago and New York. So that dynamic of kids taking care of their parents is changing. That's obviously going to increase the pool of supply and demand. And then you have government. 42% of all long-term care is paid for by Medicaid. And 40% of all of Medicaid spending goes towards long-term care. So, and Medicare has a plan there as well up to the first 100 days. I'm not going to get into that. Average Medicare claim on LTC is only 15 days anyway. But the bottom line is the entitlement programs, as we largely know, are pretty unsubstantiated. Who knows how long they're going to be able to go at this tack. And this is in no way a commentary on the current administration, but government changes. And maybe this administration or the next one or the following one could change how Medicaid impacts LTC costs. It already happened within the last 10 years when they changed the look-back period from 3 to 5 years. So the change that you're seeing here, the 3.5%, these costs, they're not actual. They're just, you know, what we're going on base numbers, not with these major impacts that are going to happen over the next 10 years. And by the way, this is just a year of care. Average care for a man is 2.2 years. You're looking 20 years down the road, it's almost $384,000. A woman, 3.7 years. You're looking at almost $645,000. And the biggest and most staggering thing of all of this, people with Alzheimer's will live 8 to 20 years with the syndrome. You're looking at almost $1.4 million in a possible claims payout. This is what I call the Titanic, by the way. And as you guys know, the Titanic, right? It was built, they deemed it the strongest, fastest, largest, most unsinkable ship ever made at the time. Well, this portfolio of $1.4 million, let me tell you something. These people are going into retirement feeling pretty unsinkable. One of them gets Alzheimer's in just 8 to 10 years. This will go down as fast as the Titanic, which went down in 45 minutes. So it's a problem. And the even bigger problem is the frequency of this. This is long-term care, folks. 7 out of 10 of us are going to need this. There's a 70% chance over the age of 65 you're going to experience some type of long-term care. Problem, most people think they're in the 30%. Nursing homes happen to be filled with people that thought they'd be in the 30% and not need this. And this is why we're in the crisis that we're in today, where Medicaid is getting exhausted for its outlay of cost towards long-term care, and people aren't doing enough about it. Only 7% of Americans own a policy. So, you know, all this was great. These are great numbers. They're good to know. Pretty staggering. They make a compelling story. But you know what? It is not what is selling this. We took a poll, and actually this was when I was at Genworth, and we asked consumers that just purchased their policy, what was the number one reason you purchased it? And you know what? It was not asset protection. It wasn't money. It was to protect their family. Because if you think about it for a second, it's really interesting. No matter what your situation is, if you need long-term care, you're always going to get it. You buy a policy, fantastic. You transfer the risk, you're covered. If you have a lot of money, you self-insure, you pay for it out of pocket, you're covered. You have a little money, you pay as much as you can, you go broke, Medicaid steps in, you're covered. You have no money, Medicaid steps in day one, you're covered. If you need long-term care, you're always going to get it. The question is, at what impact to your family? And that's why people are buying it. The way this is being sold right now is conversationally, it really begins with just these two questions. The first being, look, Mr. and Mrs. Jones, you might never need this. You might not ever need long-term care. But God forbid if you did, have you considered the impact it's going to have on your family, your children, your spouse, what it's going to do to your family dynamics, your finances, and their finances, the very people you swore your entire life that you would always protect. And this is why people are buying this. Do you have a written plan in place? Do you have a strategy? Not how much money have you put aside, not with the first question. Do you have a plan? Do you have a strategy? Have you thought about what this is going to do to your family? And then you ask them, how are you going to pay for this? Right? I mean, listen, the only thing that pays for this is your own income and your own assets, right? Are you depending on the government? Do you have insurance? Are you planning on self-funding? What are you currently allocating every year to put aside to pay for this growing cost of long-term care? And this is what I love right now. It lends itself perfectly to some of these unique solutions that are out there right now. In particular, I love the linked benefit approach. Obviously, it's what I do. But even at Genworth, when I had traditional LTC products alongside linked benefit products, what I like about this is you're really never buying anything. You're just taking money in your left pocket and you're re-intentioning it, you're repurposing it, and shifting it over to your right pocket. And what you're usually grabbing here is lazy money, money that isn't being used for income, money that isn't possibly be performing all that well. You'll take a small portion of the portfolio, and you're going to get cash value for it. You're going to get a death benefit for it. You'll get long-term care benefits for it. And some of the carriers, ours in particular, you can even get a lifetime benefit of long-term care. And you have a lot of different products that do this. You have chronic illness riders that offer you life benefits and payout for chronic illness. You have life products with LTC riders. You have true linked benefit products like the ones that we have, Lincoln Pack Life and Nationwide. There's a lot of different ways to skin the cat. And, you know, of course, listen, I'm with One America. I'm going to get a little bit of a commercial here. I'll go into our products a little bit later and talk about where we're dipping. But right now, conceptually, just to understand the opportunity out there, is that you can speak with people who might have been a little primed or have concerns in regards to what's happened in the long-term care market, right? You look at the Consumer Reports article from 1996 that listed the top 10 LTC carriers in the country. Only one of them is still selling. There were 150 companies. There was my favorite marketing piece ever. It was the funnel piece. And this was just 13 years ago. It started off by saying there's 150 companies that sell long-term care insurance. Only 4 are A+ rated. Only 3 have sold 1 million policies, blah, 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 blah. That same piece would read today, there's 10 companies selling long-term care insurance. We lost 140 companies in about 14 years. It's a very hard product, a very hard industry to be profitable in. So you have so many options now, so many different ways to provide these financial solutions to your clients. But again, you don't want to go out with just a hypo or just an illustration and talk numbers. This is a product that they react to by you pulling on their heartstrings somewhat and speaking to them in terms of you're doing this to protect your family. You're re-intentioning an asset that you keep liquid if you want it back, giving them those guarantees that you've never been able to see before, guarantees on their liquidity, guarantees on their premium, death benefit, long-term care benefit, and with us, actually, a lifetime benefit of long-term care. So those are some of the unique things that you can do with asset-based LTC. And of course, what you're getting is total portfolio protection with these kind of products. Another fantastic opportunity out there right now is the ability to use existing non-qualified annuities to fund these LTC linked benefit products. And I'll tell you, it's a huge opportunity. There's currently $3 trillion sitting out there in non-qualified annuities right now. And the government did a Gallup poll and found that nearly 80% of them are not being used for income. This is just emergency fund money, money that they put in to an annuity. God forbid something happens. It's a crisis product. And I'll tell you, when they're being handed over to the beneficiaries, they're afraid to cannibalize them and cash out on them because they don't want the taxes that go along with it. So the government, you know, as they were doing this research, saw this as a huge opportunity, right? There's always annuities out there. They're not being used for income. And the government is always looking for ways to privatize long-term care as much as possible because Medicaid and Medicare are both federally funded and funded at the state level. So they came up with the Pension Protection Act, and it added a few different elements from a tax standpoint on savings that consumers can get in a variety of ways with LTC products and linked benefit products. But one of them looks like this. So here's a typical example of an annuity right now. Guy pops in 50 grand as investment, and it gains $100,000. 50 was the cost basis. The annuity gained 100 grand. So now it has $150,000 total value, but 100,000 of that are gains. So what happens now with an existing annuity, if they use this for long-term care, which is most of the time the reason they bought it, it's, as you know, most annuities are, if not all, are LIFO, last in, first out. So the gains come out first, and when he uses this for long-term care, he'll pay taxes on that $100,000. That comes out first, and then the 50 he won't pay taxes on when he pays for long-term care expenses. So the government, in 2010, when they came out with the Pension Protection Act, said if an insurance carrier creates a PPA, Pension Protection Act eligible, HIPAA qualified annuity, what you're now able to do as a consumer is take this annuity worth $150,000, that has $100,000 in gain, do a 1035 exchange into a HIPAA qualified PPA eligible annuity, and those $100,000 in gains now become 100% tax-free. And then with some of the products, ours in particular, we'll take that 150, make it all tax-free, give you a nice fat 1.9% interest rate on LTC, 1.4% on cash, and we'll take that 150,000 and day one give you 600,000 out of the gate tax-free for long-term care. Some really interesting products out there. So there's a lot out there for you at your fingertips, from both the whole life linked with long-term care. There's so many different ways that you can do this, and there's all these different premium funding capabilities that you can do with your clients depending on what their financial needs are and what their profile looks like. And I'll explain some of these concepts just by using our products. And this today really isn't about product, it's more about concept. But this is our product line. We have our aftercare products, which are whole life linked to long-term care. And those are along the lines of the products that you'll see that MoneyGuard offers, Impact Life, and John Hancock has a product like that as well. And then we have our annuity care products, which are annuities linked with long-term care. And there's really only one other company I know that has a PPA-eligible annuity, and that's ForCare. And we'll go into that just to give you an idea of concept. And again, I don't want to take too much time, but just to give you an idea of how these kind of products work, here's a couple that has a joint age of 64. And in most of the products, the way they'll work is you're going to put in a single premium. Now, where we're very different at One America is you can put in just one premium with us, and it's going to cover 2 lives. We're the only company that'll do that. With the other carriers, you'll have to put in a single premium on both of them because ours works on a joint contract, a survivorship contract, otherwise known as joint life second to die. But how they all work is you'll put in a premium. You're going to get a death benefit. So in that example, the death benefit here is $250,000. And then, of course, you'll be able to use this for long-term care. This is how they all work. And you'll all have different options on how you can spend this down for long-term care. We have 25, 33, 50 month in our products. And here we're showing you a 50-month option. Just by using simple division, you'll see that this person will get $5,000, or this couple will get $5,000 per person per month to use for long-term care expenses. And this is the base of the product. And quite honestly, they all work this way. You put in a premium, you get a death benefit. The death benefit is your first pool for long-term care. Your premium has liquidity. If you never use this, you have a death benefit. This is how they all work. This is the linked benefit, the asset-based approach. Some of them are whole life. Some of them are universal life. There's advantages and disadvantages to both. Ours happens to work on a whole life chassis. Now, this is the base of the policy. They all have a base product, and it's not bad. Right? They're putting $1.25. They get to keep their money liquid. They don't use it. They get a death benefit doubling their money. They need it for long-term care. They have that death benefit. No one is buying these products to get a base policy. Most people that are purchasing these are somewhat affluent. If they thought their out-of-pocket exposure was $250,000, they'd self-insure. They're not buying just this. This is what I call insuring for the garage on fire. They're doing this because they want more LTC benefit. They want to minimize the risk even more. So with all of the products, and in particular ours, you can get an additional pool of money of just long-term care benefits. That's usually in the form of a rider. We call ours the continuation of benefit rider. And you'll have 2 options. The first option is an additional pool of money equal to the death benefit, and this is where we really stand alone from the rest of the industry, a lifetime benefit of long-term care that will never, ever run out. So pretty interesting, unique solutions because people love the idea of lifetime. That's gone away on the traditional LTC side as well. Here we are offering this on a linked benefit approach. So over here is the base. Over here is the rider. You'll buy your base with a single premium. You can get the rider by paying annual premiums. You can pay annual premium for an additional $250, which is less than $1,000 a year, or you can buy a lifetime benefit, which and these numbers are just off by about 10%. We had an increase on new products because one of the things that's interesting with us is our premiums are guaranteed. They can never go up. They're non-cancelable, guaranteed renewable. So we're not saying they can't go up. They've never gone up. We're saying they can't ever go up. So there's a lot of different ways, and there's a lot of premium flexibility that you have with all of the carriers and all the products. For example, this is a single premium, but over here, this can be annual premium. This could be 10 pay or 20 pay. This could also be one lump sum pay. I know Lincoln has 3 pay and 5 pay and 10 pay, and I don't even know if they still have single pay, but you'll find all these different premium flexibilities with the different companies. And this is just the one product. Then we have our product that will work with qualified money. And I'm not going to go into this in too much detail, but what you'll see here is you'll take money from a 401k or an IRA, and you'll do a 1035 exchange into an annuity with us, sitting in an IRA and will take a withdrawal from that every year for 20 years to fund this policy. You pay tax on this withdrawal, but this ends up being a tax-free death benefit, tax-free LTC benefit. It's funded over 20 years, and you can add your spouse to this as well. And every company is a little bit different on how they work with spousability. With us, any insurable interest can apply together with the Asset Care products. You can apply with any family member, a business partner, someone that you're living in the same household with, in a relationship with, same sex or not. And that's pretty, there's a lot of interesting options that you can do with that. You know, if you have even a husband and a wife, and you have to be able to apply within 25 years age difference, by the way. Yet you can have a husband and a wife that have kids that are inside 25 years. They can each apply with their children, and their policy age limits will be down so much. Look at bigger death benefits, premiums will be much lower, then they're covering themselves and their kids, and they can each list each kid as a death benefit on either policy, which is really interesting. So there's a lot of ways to do this. There's a lot of different products to look at, and the takeaway here, but I'm not going to go too much more into product today. Really, I just wanted to speak conceptually about that. What I'll urge you to do is contact Bill, contact Joe, contact Carrie, contact whoever you're working with at Carrie Levinson. And by the way, if you don't have this for yourself, the first illustration you must do is on yourself. First of all, you need it. If you're affluent, you can afford it, you absolutely need this. You're never going to be healthier than the moment you are right now, and you're never going to be younger. I always tell people you don't buy linked benefit, LTC, any of it with money, you buy it with your health. You'll get your own commission back, and let me tell you something, when you own one of these products, you are sure going to sell a whole heck of a lot more of it. So call them, get illustrations, take a look at what it looks like. The underwriting is not as bad as you might think. We don't even do parameds or medical records if you fall into a certain qualification, which really isn't that hard. We can get you illustrations as you need, and I'll tell you, Levinson & Associates, they know these products. They know all of them, and they'll pick, as Joe said, or excuse me, as Bill said, the right product that's right for your client. You know, but before I let you guys go, you know, I'll urge you, get an illustration on yourself, take a look at what that looks like, start going through, don't try to, you know, get to a place where you really feel like you must understand these products in full before you start talking about them. What I always say is when you walk away from any training I do is don't worry about knowing the products, just know where your opportunity is. For clients that don't have LTC, they have assets they need to protect, they have kids they want to protect, you owe it to them if you're holding their money to talk to them and look at what an illustration looks like for them. At least you know you've done your diligence in that. And by the way, for those of you who haven't heard, the DOL delayed the ruling, which is obviously good news for all of us. So, Bill, Joe, thanks for having me on. I don't know if you want to open this up for questions now, but I'm happy to stay on for a little bit to answer them.
Yeah, that's great news, Keith, and I heard the same about the DOL. That's why we kept telling everybody don't do anything yet because nothing is set in stone. We've seen a lot of marketing through email and webinars and come with us and sign up here. So I'm glad that everybody stood by our side and listened to what we were saying. So good stuff. Keith, that was awesome. Thanks again. And yeah, what Keith was saying too is run an illustration on yourself or let us do it. Get an understanding of the way this works, and then you go from there and start offering long-term care to your prospects and clients because the products are being sold, I promise you, just not by you. So now is the time. And if we need to do a presentation or we need Keith to get involved in any way whatsoever, he's also available. So just let us know and we can get him involved as well. We are here to help you be successful in 2017 and in the near future. So great stuff. Okay, real quick, you do not want to miss this webinar tomorrow, okay, 2 p.m. Eastern Time. This is the final part of our 3-part training webinar with our D2C, that's direct-to-consumer consultant, Todd Ewing. If you have not listened in on our previous webinars, the guy is awesome, okay? He is the top selling over the phone professional that exists in this country. And I promise you, after listening to him, you will agree with us. Long story short, tomorrow, 2 p.m. Eastern Time is the final part of our 3-part series for helping you become a true selling professional over the phone. He is responsible. He literally grew SelectQuote to the largest life direct marketer in the U.S. He single-handedly built Transamerica's direct-to-consumer channel, resulting in $30 million in just 2 years. So the proof is in the pudding here, folks. You do not want to miss this webinar. Tomorrow, 2 p.m. Eastern, we'll have close to 1,000 agents in attendance. You do not want to miss. Okay, real quick, we're almost done here, about 2 more minutes. Our upcoming agent training events, if you want to, again, jot this down, Agency Automator, that's where you're going to go in and create 1,000 leads on a monthly basis, okay? And as long as you're writing at least $82 a month of premium, which is nothing, this is free, completely free for you. So you don't want to miss these trainings. Every Tuesday and Thursday, 2 p.m. Eastern, you can jump in, stay as long or as short as you would like, but it's important that you are comfortable with the process, or else, let's face it, you're never going to use the tool, and you're not going to be successful in using those 1,000 leads. So definitely jump on one of those calls. If you're looking at recruiting agents and building your downline, Agency Automator Plus is where you're going to want to go. Every Monday and Wednesday, again, 2 p.m. Eastern Time, or sit in on both and get comfortable in building your own pipeline of clients and building your own downline of agents. So great stuff to come. And again, the 5 secrets of the direct marketers in the U.S. is, again, tomorrow's webinar, 2 p.m. Eastern, by Todd Ewing, and we're going to co-host that one. On the bottom there, MassMutual for years has been a career-type captive company. Okay, they just opened up brokerage, and they made these contracts available to a few IMOs. We are one of them. So we're going to have our official launch, the official MassMutual brokerage launch on April 13th. Again, 2 p.m. Eastern. We will co-host that call as well. But for now, you can go out, market, and sell MassMutual's awesome whole life product. They have a few other very competitive products, the best ratings in the industry. So now you can jump on board, even being independent. So great plus there. Okay, and if you ever want to catch up on any of our trainings, okay, let's say our archived webinars or live trainings or in-office trainings, go to the marketing section of our website, and you can click on archive video training or webinar training, and everything there. It's a complete library. You can sort through different topics or anything that you want to brush up on. We know we have a lot of stuff. It could be overwhelming at times, but we really try to simplify all of the tools and platforms and programs through the video library. So check that out on CarrieLevinson.com. Okay, with that said, this is our last and final slide. We're always going to end with some motivation and make sure your head is in the right place so you can go out and make more sales today. So we'll end with this by Tony Robbins, which I love. I'm a huge fan, as you know. Whatever you hold in your mind on a consistent basis is exactly what you will experience in your life. So do the best you can. Go out and make it happen in your personal life and in your business life. And I feel like they go hand in hand. So once you have a good handle on everything, you'll be very successful. You'll have great relationships, and you'll be the best person that you could be. With that said, have a great rest of the week, a good weekend, and good selling. Take care.